finance?
As a finance manager, it's quite a sort of varied role because as a college we've got a small finance team, so it's just me and then we've got two other sort of finance officers. So the main responsibilities are things like sort of producing the budgets and monitoring the budgets. So obviously all departments would have sort of certain allocations, you've got your staffing budgets and so on. Like when you think of the college, we've got sort of a turnover about sort of 25 million, so it's quite a biggish sort of organisation in terms of turnover wise. So then it's more from the sort of budgets, then through to management accounts. So having sort of monthly management accounts where you're sort of monitoring your income, and most of the income we get is all through the sort of the funding from the government. So that all comes in. So it's the management accounts, so we're just sort of monitoring where we are in the year compared to our budget, and also what we think the forecast is for the year. So that's a big part of it, and obviously it's sort of a key bit. Generally, when you're doing a sort of management accounts, that probably take about 1 to 2 weeks that you're doing. So by the time you finish one, you're not going to the next. So that's a big part of it, and obviously then making sure that sort of senior leadership team and governors are aware of what that financial position is and the financial performance. In addition to that, you've then got your year-end accounts, which is more the statutory side of things.
What do you mean by statutory?
Oh, sorry, statutory, that's by law. So legally, we have to produce our year-end accounts, and legally we have to have a year-end audit. So college year-end is the 31st of July. So we'll produce a full set of year-end accounts, or are to produce those. And I don't know, you might have seen some of those in your studies going through. Yeah. Probably quite a few of them, I'd have thought.
Finance, they're doing statement of comprehensive income.
Oh, yeah.
Profit,
so that's,
and then they've got the balance
balance sheet, cash flow statements. I mean, if anyone's interested, the financial statements of the college, but by law, all colleges have to put those on a website. So if you go onto our website, just under other documents, you can see the financial statements there.
Company's House as well.
Yeah. It's weird with colleges because although we're set up by the government as a sort of a corporation, so we're not registered with sort of Company's House, but we're a corporation and an exempt charity. So we have to produce year-end accounts, and that has to go to the government, to the DfE, but then they have to get audited. So generally, that whole process you're talking about, sort of 2-3 months in terms of that sort of year-end sort of process. And so then sort of the key bits, but then on an ongoing basis, obviously responsible for sort of paying all suppliers, making sure sort of staff are paid, although we have our sort of HR team that does that as well. But then it's making sure that pensions are paid on time for all the staff, that we're paying the tax, NNI to HMRC, and just making sure we're keeping everything in line with all sort of the other legal requirements, whether it's to do sort of pension returns, tax returns, and that kind of stuff as well. So I think they're the main bits. That's really sort of the budget, forecasting, management accounts, year-end accounts, and then the day-to-day finance functions, paying suppliers, paying staff, doing your bank recs, that kind of stuff as well. So they're the main bits.
Okay. I'm going to put a number 2. Right, question 2.
How did you apply for this job?
I must admit, this role, I've been here for I think nearly 4 years now. So the actual job itself was just it was just advertised on Indeed, and I think most of the finance jobs that's how you apply for them. So yeah, just applied and then it's sort of interview, a few written tests and things like that. But obviously I've been in sort of finance and accountancy probably since mid-20s, and most of those have been in education as well.
What other qualifications did you need for the job, and also did you have any further training once you got here?
Well, in terms of qualifications, they needed an accounting qualification. So I think we mentioned earlier, in terms of the main sort of accounting qualifications you get, you've either got the ACA, which is the accounting of certified accountants, chartered accountants. You've then got the ACCA, which is the Chartered Certified Accountants, or CIMA, which is the Chartered Institute of Management Accountants. So almost they always see those as the 3 main bodies of accountancy. So they also needed someone with that qualification. although in all honesty, the qualification in itself, as with any qualification, it's all great to have, but it's more than, I think, what you've got in terms of experience. So generally for this job, obviously they want to see that you've sort of worked in finances, you've produced accounts, and also obviously you've worked in education. That all helps as well. And in terms of further education, sort of after that or further training, I think because I'm so old and I've worked in the sector for so long, there probably wasn't any additional bits, because I've probably sort of done that in previous jobs as well. But with anything like any professional qualification, whether it's in sort of banking, insurance, accounting, all the registered bodies, you always have to, every year, you have to submit a return to your general sort of accounting body, just to say, yes, you're still keeping up to date, you're still reading all the articles, you have to give them evidence that you have been to other sort of, I'm contradicting my answer now, because yes, in a way, every year you have to say you've been on certain training events, whether that's updates on pensions or updates on sort of changing funding rules, tax legislation and so on. So that's more just the sort of personal development training that you're doing to maintain your own sort of qualification.
Don't you have to pay for a membership?
Yes, you have to pay for, there's a sort of annual membership that you have to pay, and then part of that, you pay the membership, then you have to sign a declaration, say yes, you are keeping up to date with any sort of key changes in accountancy, finance, or anything like that.
Petra, do you want to ask the next question, Libby?
So what's like the specific skills that you might need in order to do well in the job?
I said specific skills, there's obviously, you can break down to the two main bits. There's obviously the actual doing the job itself, which is, yes, you've got to know your debits and your credits, you've got to know to produce your sort of, statement of comprehensive income, your balance sheet. So you need the theory, if you like, to do that. So that's a big chunk of it, and then obviously you need the experience to, where you have produced the year-end accounts, the management accounts, how forecasting and so on. But I've said, as with most jobs, even if you've got that, sometimes it's just the other bits that are more just the more sort of interpersonal kind of skills and the communication kind of thing. In the fact it's one thing being able to produce a set of accounts, but a lot of the time it's more a case of I don't know, because we're governed by a board of governors. Obviously they want to know what's going on, but they're obviously not all going to be accountants or finance people, so sometimes it's just being able to communicate. So even when it's something that can be a little bit messy and not always straightforward, it's sometimes just being able to communicate that to people that aren't used to sort of working in finance. So I've said you need that sort of general communication skills, also just sort of working with teams as well.
So these guys, as part of their finance course, did ratios and how to analyse. Is that the sort of thing that you're doing for the governor? So you're saying, okay, this is our balance sheet, but what is it telling us?
It's not just there's the accounts and there you go. As part of our management accounting sort of suite of reports, if you like, yes, we have the SOCI, the balance sheet, the cash flow, we have all that. But then we have a schedule of key performance indicators. So, for example, a key one for us and all colleges is, what's the percentage of our staff costs compared to our income? Because we're obviously, as with lots of, if you say, I wouldn't say we're an industry or a service industry, but if you think of it just as a business like that, the main thing we're doing, it is providing staff. It's being able to teach. So one of the key things for us is, okay, of our income, what percentage are we spending on staff? And obviously that's the key thing.
Is it 80%?
Well, actually for us, we're really good. The average, I think that's probably average for secondary schools.
Right.
For sort of colleges, the average is 70. And so we're really quite healthy, whichever way you argue it, because it's getting that balance in terms of, yes, you want to keep it low so you can generate surplus. Any surplus you generate, you can then plough that back into the buildings, and that's part of the reason we're being able to do the new business school and so on, and potential art centre. So you've got your sort of staff cost of percentage of income. That's a key one. Also, probably a general one that you would have looked at, just a general sort of surplus as a percentage of income. So like of your total income, how much of that are you converting into profit? Because generally that profit, well, it's not all strictly cash. A lot of it will be. If you generate that surplus, then you can put it into the sort of following year for your reserves and for your sort of fixed assets. Other ones we look at, sort of current ratio, which is probably when you've looked at where you're just looking more at your sort of liquid assets in terms of like at a particular point in time. Can you settle all your liabilities? You know, can you pay all the staff, including Marie? Can you can you pay all your suppliers out of your sort of, cash balance and everything else? So we've got, yes, a lot of it is saying you've got your statements, but then you're saying these are the ratios, and you're looking at your forecast. And in a way, I find it interesting.
What I'm pleased about that you're saying is everything that we have spoken about in our business finance. So you're hitting it right on the...
Can I say, I must admit, it's one thing I found when I studied, both when I was doing A-levels and also when I did accountancy qualifications. When I was studying it's almost only when I'd finished the accounting qualifications and then I was in a job where I wasn't necessarily just a junior in a particular role, just doing a particular bit of an audit. It was only almost when I'd sort of finished all that and then you are doing the whole thing. Almost then, that's when the ratios, the learning bits actually all finally made sense.
Yeah.
Because I think, and it's probably just me because I was a slow learner, but when I was learning, it was very much doing it because you had to get through the exams and you couldn't always see how it was being applied.
Yeah.
So I think then when you've done that and then you're producing a set of accounts and you're doing the ratios, you're trying to explain, okay, why has this ratio gone up, why has it gone down, what's going to change in the future. It's only when you're doing that that
in real life.
Yes,
yeah.
And I must admit, I'm quite a bored person, I don't mind admitting that, but I do genuinely love it because it is interesting. It is nice, if you like that kind of thing, obviously, but it's nice looking at it, seeing how those ratios are, just seeing how the college will do, what it's got to do, trying to explain it to some other people, because obviously fundamentally, although education is the key thing, of course it is in terms of, sort of teaching, we want students to leave where they've got the qualifications so they can move on, but fundamentally any business, whether it's education or whatever, can't do that unless you've got the fundamentals, unless you've got that sort of business, you've got the finance in place, so you can deliver the training. So I think that's what makes it interesting. I've completely forgotten the question now, so I've probably gone off track a bit, but I think that was covered the main bits, I think.
Right. Next question.
Does this training lead to qualifications, and how long have you been in this role?
Yeah, I mean,
we think we've covered that, haven't we? 4 years.
Yes, I've been in this role 4 years,
Yeah.
and I mean, with the accounting qualification, it was probably about how long did it take me? 3-4 years after I'd left to the uni to get the actual qualification.
What was your degree?
That was in maths.
Right.
But again, that was mainly, at the time, it was more the case I wasn't entirely sure what I wanted to do, and maths was the one thing I was okay at, so that's the route I went down. And I'll be honest, I probably fell into accountancy, as I think probably lots of people do. There's, I'm under no illusions that when lots of people grow up, lots of kids aren't going to grow up thinking they want to be an accountant at a really young age.
Yeah.
So it is the kind of thing you fall into, but it's only then that you realise there are lots of different fields and lots of different sort of branches to it, that it does open up a whole host of things. I know I've gone more traditional route, just sticking as a finance manager, but there are so many other roles that it can lead into as well.
Do you need the qualifications? So there was ACA.
Yeah.
ACA, ACCA, and
Yeah.
CIMA.
And CIMO. Wow,
That's
good
it,
memory.
Yes. Oh, yeah, actually, there is
Yeah.
another one as well. There's also SIPFA, which is kind of in that. That's the
Is that C?
that's the public
not heard
finances
of that
one. Yeah, I think that's the Chartered Institute of Public Financial Accounting. So
Ah.
that would be more if you were just
Government.
strictly, yes, if you were sort
Right.
of government financing, but it's on the same kind of level as C. But that would be much more specific. I think people would only tend to get that qualification once, I don't know if they were doing sort of health service, police forces, that kind of thing, where that would be more relevant, where they're dealing more with government budgets and so on.
Cool. Ashley, back to you.
What is the best part about your role?
I'd have said the best part. Probably sounds a bit corny, but it is working with I'm here particularly. It is working with the team and working with the staff, and the fact it's a varied role, so you do get to work with lots of different people from lots of different departments. So obviously that's always a nice part of the job, as I think it is for any job once you find the right job. But in terms of the day-to-day stuff, as I said there, I do enjoy producing producing the budget, producing the management accounts and the year-end accounts. There's something quite
Satisfying.
yeah, I
Particularly
do.
in a successful college, it must be really lovely.
Oh, it is. Yes, I've worked at other colleges where it hasn't been that, but even then, it's still, in a way, it can be still fun in a way if you're working with such a tight budget and you can't get it to work, and you're really having to think of ways of you can reporting it in such a way that you've got to get a budget that does work, that you can generate a surplus. Because also you've got to remember when you do a budget, it's not just for the following year. You're doing that for 3 years, so it helps inform what the college's strategy is. Obviously, for the college, you're looking in terms of the demographic growth, in terms of what's happening with student numbers in sort of Hampshire, in terms of you're looking at the sort of student numbers in secondary schools, and the growth in student numbers that we've got now. That was kind of predicted 5, 6, 7, 8 years ago, when they knew that from the secondary schools, that's when they had a boost of students, and that's now feeding through to the sort of sixth form sector as well.
A long time we had lessening numbers, didn't we?
Yes.
So that was really affecting all the college's funding. And
yes, and now that sort of picks up again. So I think it's that kind of thing. It is. I find quite interesting. You obviously have to model it. You have to say what impact that will be. You've then got a whole host of other things in terms of what's the government doing with their funding rates, what's the inflation, we've got the strikes of virtually every public sector, whether it's teachers, support staff, whatever. So you have no idea what impact that's going to have on future staff costs. Even if a pay agreement is reached across all these sectors, organisations would have to pay those pay rises. Doesn't necessarily mean they're going to be getting the funding from the government. So it's all of those things that you sort of throw in that does make it quite interesting, because it does make it more fun in a way, because it's not just a case of process this invoice, process the next one, process the next one. You are having to sort of think about it a lot more and sort of just see the whole picture, which I think that does make it fun. And even with the year-end accounts, it's a nice thing when you get to the end of the year, you do your year-end accounts, you're signing it off. It's kind of right or wrong. You've got it, and then it's done.
Just a quick question about year-end accounts. Why is ours July to July, and why are other companies? Why do you choose what date your year-end is? I never knew.
With the colleges, because with colleges in particular, schools and colleges always used to be part of the local authority. Now this was back in 1992 that all sixth forms, they had the I think it was the HE Education Act passed, and that's what sort of made colleges sort of go independent. So they were then dictating, you go independent, and the year end is 31st of July. So almost that's what.
Because a lot of businesses have April. I thought April to April.
A lot of sort of businesses like limited companies, PLCs, they might have a year end of 31st of March, 30th September, 31st December, whatever.
So you can choose as a business when. Is it dependent on when you start your business?
Not necessarily. No. So I mean, if anyone here wanted to set up a business, anyone can go onto Companies House website and set up a business and just have it there set up as a dormant company. And whenever you do it, you can set up whatever year end.
Oh, okay.
So even if, say, you decide to set up a business today, or sort of 26th of June, you might say, well, actually, I want to be starting a year end of 31st of July. So it would just mean when you produce your first set of accounts, it would be for that sort of 13-month period.
Oh, okay.
But really, it's just up to, for the college, it does make more sense, because it's very easy for us in the fact that we have to work by an academic year, because it's just that rolling cycle of sort of when students move on to the second year, when we get new students moving in. So it's a clean cut-off, and I think probably that's what lots of businesses do where there is that kind of pattern. Although I think majority of businesses probably stick with a sort of March year end, simply because that's the sort of government sort of tax year end as well. So it keeps things simple. Yeah. But I think if you're a business where, say, for whatever reason, sort of March was a really, really busy period. I don't know if you're sort of organising. I don't know if you're sort of linked to in the sort of hotel business where. Sort of July is going to be your sort of busiest time. You obviously wouldn't want that as year ended. You might want maybe something like December, where it's a little bit quieter. You've got the summer season out of the way, and so on. So it's really up to organisations to do. But I think generally, it's you almost find it's almost by sectors. Once sectors get to know, okay, this is going to be our year end, lots of follow suit, and it does make it easier for comparing.
I'm sorry, I'm asking another question. I'm sorry for you, but do you? As I get the advantage of everybody in education being at that date, it means can you see everybody else's accounts?
Oh yes.
So do you have a laugh when you're looking at other Hampshire colleges?
Oh, yeah, well, I must admit, I mean, all organisations, all colleges always have to publish their accounts online, so you can always go and see the full accounts. But in addition, because we're so sort of heavily sort of regulated, if you like, all colleges, we do our year-end accounts that have to be published, and that's governed by sort of financial accounting standards and also sort of education-specific standards. But in addition, when we do the year-end accounts, and then we have to do a government return as well that all colleges have to do, where you have to put that information in a more complex sort of spreadsheet where you break it down in much more detail. Now all of that then gets published, and that details things like electricity bills, gas bills, really drilling into it, student numbers, whether they're sort of T levels 16 to 18 sort of students, A levels, whatever, and that comes out of a big spreadsheet. So pretty much all the colleges you can see in detail sort of how well or not they're doing. And that's it. But the one thing you do notice when you do sort of look at the colleges that are failing, it is obviously the smaller colleges where they don't have the economies of scale. And
what do you mean by economies of scale?
Oh, sorry, economies of scale. It's if, for example, you've got a college, say they're sort of in somewhere in the middle of the sticks, and they might only be able to recruit due to where they are. They might only be able to recruit maybe 1,500, 2,000 students. Now, for those kind of colleges, however efficient they are, they're always going to struggle, because if you've got that few students, if I'm going to take sort of business, which is obviously very popular, sort of A-level, BTEC, or something like maths, you are going to get lots of students applying for those, which is fine. But then you might get some courses where you still want to offer them, whether it's sort of French, German. Now here, because we've got close to 4,500 students across the 2 years, it's very easy to accommodate, have a full class, maybe 2, 3. I think, probably sort of maths, probably one of the sort of biggest ones in psychology. I'm guessing you must be having 10, 12 classes all in the first year. But if you're a much smaller college, you may find you're running some particular subjects where you've only got enough for half the class.
Loss,
you're still going to run it because it's still generating a contribution, but you might end up with sort of average class sizes of maybe 15, which you're still going to want to run because you need, and the colleges have to provide the education, but simply because of where they are and they don't have all those students, they're running a class of 15, whereas potentially we might be running a class of say 25. Now, that has a hit straight away to your sort of profit, because suddenly you're almost, I'm saying, say you're dealing with class sizes of 10 and 20 or something like that. If you think of it like that, you've still got the same number of staff hours living in that class, but what you're doing almost in the college where you've only got sort of 10 sort of students in that class, the effect is almost doubling your staff costs.
Do you realise that we get paid based on numbers of students?
Yeah.
So it's about £4,000 per student.
Yes, that's gone up because every year we submit a return. It's every October we'd have a return to say, okay, this is how many sort of students we've got. That goes to the government, and then the funding we get, it's always retrospective, effectively. So
does it depend on how the students do it?
You've got to complete, I think, don't you?
There's what they do. They should take the numbers at that date, and they say it's gone up recently, so it's now up to, I think it's 4,600 per student, which is good. But you think of say a private school could be charging 15,000 quid a term. I know they're small class size, but that just gives you an idea where you're dealing with maybe a sort of fee in a private school of 30, 40k as opposed to 4,000 here. So they look at the numbers, but yes, they do then have a factor in terms of, they refer to the retention factor. So for example, they would look then at the previous year's data to say, well, okay, you started the year with 4,500 students, you ended up with maybe 4,400. It says, well, okay, maybe 0.2% of your students left, so therefore the funding is reduced by 0.2%. and then there's lots of other factors they bring into it as well, like some area allowances depending where students have come from, what their prior grades were as well. So there's lots of other little factors, but the main bit is pretty much number of students, and they multiply that and separate.
Thank you. Next question.
I'd said probably the most challenging. Probably talk about it a little bit in the fact because we're sort of independent, but we are a corporation and we rely on sort of government funding. So although all the decisions we take are taken by our senior leadership team and then by the governors, it's very much dependent on the decisions that are made by government and central government. In the fact that take the sort of the teachers' pay dispute, when that's coming through, and if they turn around and said, right, actually, yeah, we think colleges should be paying 6%, we'd have to pay 6%, or 7%, 8%, and
or 10. That'd be really nice.
10. I must be saying,
Yeah.
I'd be more than happy with that. Believe you me,
Yeah,
because
yeah.
it falls hand in hand with the support stuff. But there's things like that. So it's the external factors. You've then got the whole point with the funding rates.
Can I just pause you a sec? External factors. You did that in Unit 1, didn't you?
Yeah.
So the government is an external factor. You have no choice, do
no.
you?
I mean,
you can have an impact. A college like this can. Sorry, I'm digressing again, but colleges work together to have a voice for government. So you can have an impact,
yes.
but pretty much.
I think that's it.
Yeah.
You can have a voice. I think that lots of
yeah.
schools, colleges do, but fundamentally, it's some of the people in government, whichever party you're talking about, but whoever is in government, the decisions are sometimes made by people that, since they probably left college, university,
Private school.
private. Yeah, I was going to say probably a very
Yeah.
private one as well. They've never probably been involved in education or delivering it, so they don't actually know the impact of the decisions that they make they're having on schools and colleges. So yeah, so you've got things like pay, but fundamentally for us the biggest thing is the funding rate that we get, because we generate well in excess of 90% of our income all comes from the sort of government grants. Now, up until 4 or 5 years ago, the actual funding rate had remained at £4,000, and it had been at that level for 8, 9, 10 years, and it hadn't changed.
Wow.
Yeah, they'd obviously pay inflation had been very limited, but it still had been creeping up, admittedly maybe 1% here and 1% there, but if you took inflation as well. So in real terms, schools and colleges have taken a huge hit because their funding was just being frozen, where all the other costs were going up and up and up, which is why so many schools, Barton were in a healthy position, but why lots of schools and colleges were being forced to sort of make staff redundant. They're being forced to drop various subjects, which unfortunately happen to be lots of the art subjects as well, which is seems criminal when it's such a big sector. But do you know what I mean? So it's all those decisions made in government that then feed through, and that obviously is then challenging because yes, you've got to get a workable budget, but then more importantly, schools, colleges, and the governors, because they would have the ultimate say, then do have those difficult decisions because as a college, as a senior leadership team, of course, they would love to pay, all the staff, teaching support, a rate so they're not impacted by inflation. They'd want to provide as many different subjects as they could. They'd want much, much smaller class sizes and all this, but unfortunately, we're very much governed by the government because we can't say to the government, okay, there's a budget, we're making £1 million loss this year. Because straight away someone would be in with special measures and then you'd be merged. So it's so that's kind of the biggest challenge, if you like, in terms of just working with those external factors. And the problem is, the way it comes with government, you don't often get much notice at all, and you don't always get much consultation, or sometimes never any consultation. It's just a case of saying, well, actually, these are the rules. That's what you've got to do. But then it's knowing how you adapt to that to make sure that you do remain successful, and then that you to make sure the college does become future-proof. Because yes, you want great experience for the students you've got here, but you're also always thinking about students in the following year, the year after, and the year after, and just to make sure we're delivering the education that we want. When government are talking about sort of T levels, whether they go back more to the apprenticeship sort of model, which I think is kind of what we should do, because so many years it's always been just about traditional A-levels as being the thing where you think on the continent, apprenticeships have a much higher profile, and then you can argue it's much more relevant because it's getting you directly into work. But it's all those kind of things, those external factors. Yes, it links in to the finances, but it has a much wider implication as well in terms of the direction of the college.
Wait, I've got a quick question. So, because you're the one setting the budget, like, who decides how much you get paid?
Oh yeah, no, with that, because with the whole budget, that's a good question actually. Yeah, it's not me. It's not me, unfortunately. If it
Give
was,
us a pay rise.
yeah. So with the budget, I would normally produce the actual fundamental budget on SLT. We've then got a vice principal of finance and resource. So that budget then goes to the senior leadership team.
Yeah.
We've then got a board of governors. Now the governors, and when you say governors, they're a bit like. Probably a board, a board, sort of shareholder board of directors, where they're not paid by the college, so they can be seen as independent. So any pay decisions would always be going through that process. They'd be going effectively from senior leadership team to governors, but obviously the governors need some assurance as well, and that's where the unions come in as well. So every year, and well, at the moment with the current pay dispute, and that's across the whole public sector, probably doctors, nurses, teachers, and so on. So for schools, colleges, and the unions, there is a sort of set sort of pay scale, if you like, and all teachers, whether I'm pretty sure it's secondary school or colleges, I'm not sure if it's the same pay scales or slightly different, isn't it?
If you're in FE, it's different to sixth form.
Yes,
Yeah.
but there's sort of from external bodies, like we've got the Sixth Form College Association, so they would say, okay, these are the bandings that you can use, or we would suggest that you use. If
Bandings means your starting point and your end point.
Yeah. So for instance, they might say you qualified teacher, you would come at a certain point, and then there might be maybe 15, 20 different point scales, each one maybe going up by £2,000, something like that. So as you progress, as you get qualified, as you get more experience, then you sort of go up. And that's the same for support teams as well. So we'd have these pay scales that come from the Sixth Form College Association, and pretty much we'd adopt that. And then if, for example, senior leadership team said, well, actually, we want to give all our teachers a 20% pay rise. That would be nice, wouldn't it? But if they did, but in terms of controls in place, that would have to be going through governors. Now, if that went through governors would obviously put a stop to that. But even if they didn't, you have a very much a transparency as well in the fact that any accounts that we have goes onto our website. So but any stakeholder, and so by stakeholder, you as students, staff, the government, anyone using that set of accounts could have a look at that. Now, in that set of accounts, because we have to produce it in a set format where we've got to say sort of what pay increases there have been, where our costs have gone. Obviously, if anyone could see the fact that, okay, everyone's got a 20% pay rise, obviously that would sort of raise alarm bells with the ESFA. And that's the...
Who's that?
Oh, sorry, the ESFA is that's the main body for government that looks after the funding and administers the funding as well. It's part of the DFE, which is the Department for Education. So the ESFA is the Education, Skills and Funding Agency, but it's all part of the DFE. So I lost my track. What was I saying?
No, that was your question.
That's my question.
Yeah.
So I'm saying so, and because it's all in the accounts, everyone would then see it. So you really wouldn't be able to. And because we produce our accounts and we do the spreadsheet that goes to the ESFA, that has a whole set of formulas and it works out our profitability, looks at our staff costs, and then it gives us a financial health rating based on all these sort of financial ratios we've got as well. So there'd be controls in place for saying, well, actually, you've got to sort of keep within what's right for the sector.
Wait, if you were to give one piece of advice to someone who's trying to get into industry, what would it be?
I'd say if it was someone trying to get in accounting or sort of finances, I would have said that the main thing is do get an accounting qualification of some sort. Not saying that's the be all and end all, because I don't think it is. I think everything is to do with the experience and then the work experiences that you get. But with a sector like accounting, when there are such those recognised accounting bodies, if you get that first, then you can almost sort of go on to anything, because you know you can use that qualification to sort of open the doors that you want, whether it's sort of audit, whether it's sort of tax, whether you want to become a CEO in a PLC company or whatever. But it gives you all those sort of opportunities. So that would be the main bit to do.
Yeah. Nick explained before you guys came in. He said that he went out to work after having his degree, started in an accountancy firm, but there was another person that had gone from college and done his apprenticeship, if you like, and was the same age as him, but had got so much further,
Yes,
because he'd already got his qualifications in accountancy. Whereas Nick had the joy of going to uni,
Yes.
but then because he didn't know what he wanted to do, then he went into accountancy. So yeah, it's up to you if you're not sure what you want to do. But
I think we said earlier, I think if you know where you want to be at the end, sort of work back and say, well, actually, if I know where I want to be, if you know you want to be in banking, then sort of work back from there and say, well, actually, is university the best degree, or is there an apprentice that's a better path, if you like, for getting there?
Have we got any more questions? Is that it? Has anybody thought of anything else they want to ask?
So for example, the money that you make from last year, is there like a pool that you pay the teachers, or do you just pay as you go along?
We pretty much, the way it works, that when you've done your sort of profit and loss accounts or statement of competence of income, it's just also paid as you go along. So obviously every month we know there'll be a set amount that we're paying out in salaries. And then
Which is what? What is? Do you know off the top
of
your head?
in a year, our total income is
So
25 million
Yeah.
for this year. I'd said sort of staff costs this year with pension contributions is probably going to be about 14.5, something like that. So it's a big chunk.
So how many teachers are in the college?
We've probably got about how many staff? It's always difficult because they're not all sort of full time, so it's really difficult. But I'd said in total with support staff as well, we probably, when we're doing a pay run, maybe about 400 head counts, I'd have thought. And that's obviously when we've got invigilators and cleaners and finance staff, the whole lot. But yeah, so it all, because obviously we've got one bank account, so every single month we're going to be paying that set amount. But in terms of the pot, if you like, the pot of funding that we get, like even this year, yes, we will be making a surplus, as you'd need to budget. But any surplus we make, all that's happening, if in a year, say we make £1 million, first of all, that's not all cash, because there'd be something all cash. But if that was all cash, for example, that just means we've got more money in the bank account. That then means we've got more money potentially for future pay increases if that was needed, if things were going up, or we've got more costs if there's more inflationary pressures, or as we're doing at the moment, the last few years, since I've been here, we've finished the front end of the science centre, we've got the sort of business school that we're doing, there's in the arts school. So any surplus we're generating just means then that we've got those funds that we can then put onto the balance sheet into our sort of fixed assets. And obviously then you get your difference between that's why you're generating a surplus in that I&E, so you can then invest it in your sort of fixed assets going forwards.
Is it difficult managing the cash flow?
In a way we're quite lucky, because unlike businesses where you're just relying on sort of sales to customers, we're quite lucky because every month we get a set amount from the government and we know in advance what that is. So it makes it much easier to forecast. So I know compared to some industries and some sectors, you take something like when it was sort of COVID, it must have been impossible for some organisations when literally their sort of income completely drops. They have no idea when they come back, so it must be horrendous. But for a college, and a college, that's where we are in a good financial position, it is easy because we've got the cash there. I think where it's difficult, as I've had in other colleges as well, is where you still might be getting that money coming in, but where things are so tight, if you haven't got student numbers, it can be a real challenge. Because then you're looking, if you're sort of forecasting 1 year, 18 months down the line, and you can see, you end up with a particular point where you can say, well, actually, when we get to that month, we really are going to be struggling. And that, unluckily for me, as finance manager, that's luckily a case where you can say, well, actually, these are the forecasts, this is potentially what's going to happen. It's then almost one of the main headaches of senior leadership team, governors, to say, well, actually, we know what's going to happen. What can we now do to effectively get around that? So it can be challenging, but we're quite lucky at the college because we're in a good financial position.
And one more question. So from the revenue that you made from the previous year, after like all the total costs and expenses, is that what is used as the budget for the next year? Or is there like other costs? Or?
No, what we tend to do, we set the budget for the year. So we then might have a sort of budget, and so we've got a budget, and normally we'd set the budget. It actually got approved by the corporation last night. So the budget would be approved in June. We sort of produced it a couple of months ago. It gets approved in June. That then comes into play from sort of August through to the following July. So we might say, well, actually, we're budgeted to make a surplus of £1 million for next year. So that might be the budgeted surplus. Now, it might be, as we get to the end of next year, we might have made a surplus of only £500,000, for example, which just means for the following year, we've maybe got to be a little bit tighter if we want to maintain that cash balance.
Is any of the money saved or like stored somewhere in case you need it suddenly?
A lot of the cash we get is just our main current account, which means that we can get it pretty much instant access. But obviously at the moment, the sort of interest rate is quite high. You can get obviously much better rate if you can sort of get it out of the current account. And it comes into the cash flow as well. So when we do our cash flow, yes, we have some funds that we put in almost like in a 32-day notice account, where it gets sort of interest almost close on base rates now. So when you're talking about 5%, when you look at the sort of cash balances, you can get a decent amount. So that's all part of it, and almost a part of a challenge, the fun bits as well, in terms of knowing what your sort of cash flow is, what is excess cash flow. None of it is excess cash flow in terms of the college would never sit on cash just for the sake of sitting on it, because if we've got the cash there often, as you said, the last couple of years, our cash position had been sort of steadily rising. But that was only because we knew we needed some funds so we could sort of build a business school. And obviously it was too big and too expensive to think, actually, we will just do that out of 1 year's surplus and 1 year's cash. So yes, all of that sort of cash that we get, it effectively sort of goes there. Yeah, we split it between accounts to help us get a good return, but generally it's always earmarked for something sort of going forwards.
Thanks, Barton.
Lovely. Well done, Nick.
Okay.